Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we are going to be talking about meme stocks. A lot of them are down today. A lot of you guys, if you're invested in these, you guys have definitely seen your accounts go down today. Now, with that being said, I finally got some skin in the game, so it's probably my fault for crashing these meme stocks. I bought a bunch of $31 June 18th calls for Workhorse this morning, and they're already down 70%. So just because I bought in, that's why the market's probably down. However, there is actually a fundamental reason for the market being down, and a lot of that's due to what the Fed released this morning. Now, before we get into that, I'm going to kindly ask you guys to leave me that early like on the video. I did a lot of research for this video, and we're going to be going over a lot. So that early like is definitely appreciated. And always remember the links below for public to sign up. You get up to $70 now in free stock. So before it was $50, now they're giving up to $70 in free stock. They've upgraded their promotion. The link's in the description to sign up, and it's also in the pinned comment section. All you have to do is fund your account. You can put in as little as $1 and you get this promotion. So it's basically free money, so you might as well do that. And without further ado, let's get right into the video. Alright, so as you guys can see here, I bought this Workhorse $31 call option. It expires on June 18th, which is 2 Fridays from now, so it's got about a week left until expiration. And it's down about 65% on the day. So as you can see, I'm down about 50%. My bad, I said 70%. I'm down about 50%, $100 in just a few hours. As you can see, I bought 3 contracts for 49 cents, then 1 contract for 35 cents, then 1 contract for 23 cents, and now it is trading at 21 cents. It went all the way down to 12 cents at one point, which was a huge loss. So it really was me. Like, I literally crashed the market, so you guys can blame me. Leave a comment down below yelling at me for crashing the market, because it's all my fault. Anyways, Clover is down about 12% on the day. Workhorse is down 10% on the day. AMC is down about 15% on the day. Clean Energy Fuels is down about 13% on the day. CLF, which is another meme stock that we haven't gone over on this channel, is down only 0.58%. Now, this one is the least amount of a meme stock, but it has been rallying, as you can see, 14% in the past week. Now, I just want to take a look, because in the past week, this is still up 61% for Clover. In the past week, it's still up 5% for Workhorse, with the past month being 85%. AMC past week, this one has been down 15%, but the past month it's up 300%. And CLNE, we are up 10% on the week, 32% on the month. And yeah, so everything seems to be struggling today. I'm going to take a look at the updated short interest numbers for you guys real quickly. So for Clover Health, the updated short interest as of yesterday is about 47.47%. Workhorse is up to 51.59% as of yesterday. AMC is up to 12.7% as of yesterday. And Clean Energy Fuels is up to 11.81% as of yesterday. So the short interest on all of these stocks have been increasing over the past day. So they all increased yesterday. So the people who are short on this stock have been reloading their shorts. Now, they are in the money right now. They are making money since all of these stocks are down about 10%. That's about a 10% gain for the people that are going short. So if this short squeeze was to occur, we would have to get back to the values that we saw yesterday. So for AMC, it would have to get back above around $50 a share, because yesterday that's where a lot of people reloaded their short positions. Same thing with Clover. It'll have to get back up to $20 a share, or even more if they reloaded it around $25 per share. And if most people in Clover got in around $20 a share, they are now up $5 per share. So it would have to take a huge gain on the long side to make these shorts actually be losing money if they did reload their short positions yesterday. Workhorse, we'd have to get around to the $16 range to even the $18 range, considering they reloaded at the $17 to $18 range. So Workhorse, it's a bit more of a believable story for them to get back to that range, as they haven't dipped too much. They were actually hanging out around this value yesterday. They were in the 15s yesterday, and short interest went up. So I'd assume a lot of people shorted around the $16 range for Workhorse. And then Clean Energy Fuels, you can see that it was hovering around $13 a share. I'd imagine most people shorted around $12 to $13 a share, and now we're at $11 a share now. So we'll need a little bit of a rally for Clean Energy Fuels as well. Before we get into exactly why these short squeeze meme stocks have crashed today, I just want to let you guys know about Public.com, because I am a partner with Public.com, and it is an investing application on iOS and Android, and it's just very, very good. It rivals Robinhood. It's very, very similar in terms of ease of use to that of Robinhood. So that's why I am building out my long-term portfolio over there. And it's just so nice because they have great customer service. Whenever I've talked to the representatives over there, I've had such a great experience. A few of the representatives over there have actually commented on my posts, and it's just a very, very welcoming community. They also rely off tips alone, and they don't sell your trading data. They don't do payment for order flow like Robinhood. So that's why I really appreciate Public. So you definitely want to consider Public if you want to be a serious investor, because they are better than Robinhood, and they have that same appeal in terms of user interface. So with that being said, I have to let you guys know about Public. You can sign up using the link below in the description or in the pinned comment section, or you can just download the app from the App Store, and when you sign up, you can use code HOOTMONEY, and you get up to $70 now in free stock for signing up. They upgraded this from $50 before, so if you haven't already signed up, now you get up to $70 for signing up, so you might as well do it. It's free money. And yeah, let's get back into the video. Alright, so as of 8:30 a.m. Eastern Time on June 10th, 2021, which is today, the U.S. Bureau of Labor Statistics released CPI data for the month of May. So the consumer price index for all urban consumers increased 0.6% in May on a seasonally adjusted basis, after rising 0.8% in April. Over the last 12 months, the all items index increased 5% before seasonal adjustment. And this was the largest 12-month increase since a 5.4% increase for the period ending August 2008. Now, I don't want to create some unnecessary fear, uncertainty, and doubt, but I just want to bring you guys the facts. So we can see here that the stock market crash of 2008 occurred on September 29th, 2008. That was just a month after the 5.4% annualized increase in CPI for August 2008. So right here we have the market crash for 2008. So as you can see here, this is the 200 SMA line, this red line right here. And as soon as the S&P 500 closed below that 200 SMA line, the market absolutely tanked, and it gapped down all the way down here, going from $123 per share for the SPY index all the way down to $70 a share at its lowest point in March of 2009. Now currently the S&P 500 index is nowhere even close to the 200 SMA line, which is around $265, and it's currently sitting at $423 at an all-time high for the S&P 500. So with that being said, it is definitely showing that there is room for it to fall. If we take a look at the RSI indicator down here, we are reaching about a 70 RSI, which definitely means that the S&P 500 is overbought. As you can see, the last time that we approached this value over here in August of 2020, there was a small correction, but in February of 2020, before the coronavirus market crash, or market correction, however you want to see it, we reached above a 70 RSI, and it dropped all the way down to about a 20 RSI, and as you can see, it bounced almost perfectly off that 200 SMA line. Now, just because it's reaching an overbought RSI doesn't mean that it has to cause a market crash. As you can see, in 2018, there was also a bit of an interest rate debacle, and it did cause a little bit of an S&P 500 correction eventually. However, it was not too extreme, but the S&P 500 did trade flat for about a year before recovering. So the S&P 500 is definitely set up to have a bit of a correction. Now, you might be wondering, what does this have to do with meme stocks? Meme stocks don't trade on fundamentals. Well, I'll explain that right now. So meme stocks might not trade on fundamentals. However, when there is increased interest interest rates, the high growth, the high flying stocks are always the ones to come down first. So with AMC, Clover Health, and all these other meme stocks going to the absolute moon, obviously if there is inflation scares, then they will be the first ones to fall down. If there is any sign of a market correction, the bubble is set to burst on the most overvalued, high valued stocks. And in this case, those are stocks like meme stocks. So because of all this, meme stocks reacted very, very poorly to these high flying CPI numbers. And while I don't want to cause unnecessary fear, uncertainty, and doubt, I just want to educate you guys on what is going on, because I know a lot of people are confused and think that it's hedge fund manipulation. However, there are tons of different variables that feed into all of this. Now, if inflation is going to be much higher than expected, a different play that you guys can make is into cryptocurrency. I'm not saying to go into cryptocurrency. I'm not a financial advisor. However, when the last taper tantrum happened, which was in February, and the meme stocks crashed, that is when cryptocurrency started running. As you can see here on the chart of Gamestop, around January 28th, January 29th, so the end of January, that is when Gamestop originally crashed, going to February lows of around $45 to $50 a share. Around the same time of January 23rd to January 27th, Bitcoin started rallying all the way up to around $60,000 per Bitcoin. So while GameStop crashed, that is when Bitcoin started to rally. So with these fears of inflation, Bitcoin definitely benefits from it. So I just wanted to share you guys the opportunity that is in cryptocurrency, because that is what happened last time. And although history doesn't repeat itself, it often rhymes. So this could potentially be an opportunity in the markets. That's all I got for the video for you guys today. I hope you guys enjoyed. Remember to leave the thumbs up if you guys learned something in this video, and subscribe to the channel for more content like this every single day. Use the link in either the comment section or the description to sign up for public, and you get up to $70 in free stock just for signing up. So it's basically free money. You can deposit as little as $1 and you get this free stock. So with all that being said, that's about it for the video. I hope you guys enjoyed. Peace.